Imagine a world without money. How would you acquire the food you eat, the clothes you wear, or a roof over your head? For most of human history, something like this was the reality. But from humble beginnings with simple bartering to the complex digital currencies of today, money has been on an incredible journey. Join us as we trace the fascinating evolution of money, exploring how humanity has continuously innovated to make trade more efficient, reliable, and ultimately easier. Our story begins in prehistoric times with barter. This was the most direct form of exchange. I have fish, you have berries, we swap. Simple, right? But it quickly ran into problems. The biggest hurdle was the double coincidence of wants. You needed to find someone who not only had what you wanted, but also wanted what you had. Imagine trying to trade a whole cow for a handful of tools. It was often impractical, divisible, and difficult to agree on a fair value. To overcome these limitations, societies began to adopt commodity money. These were items that held intrinsic value and were generally accepted for trade. Across different cultures, we saw everything from salt, which was crucial for preserving food, to intricate cowrie shells, and even large stone wheels like the rye stones of Yap Island. These commodities often had practical uses, making them desirable, and their scarcity helped maintain their value. Precious metals like gold and silver soon emerged as superior forms of commodity money. Their durability, rarity, and divisibility made them ideal. Unlike a cow that might die or grain that could rot, gold wouldn't perish. It could be melted down and reshaped, making it highly versatile. It was portable, durable, and universally desired due to its beauty and scarcity. This led to a groundbreaking innovation: coinage. Around 600 BCE, in the ancient kingdom of Lydia, the first standardized coins were minted from electrum, a natural gold and silver alloy. These early coins, like the Lydian stater, featured official stamps guaranteeing their weight and purity. This eliminated the need to weigh and test metal every time a transaction occurred, making trade incredibly fast and trustworthy. Coinage quickly spread, fueling economic growth and facilitating the rise of vast empires. With a universally recognized and reliable medium of exchange, merchants could trade over longer distances, and governments could efficiently collect taxes and pay armies. The minting of coins became a powerful symbol of state authority. While metal coins were revolutionary, they too had limitations, especially for large transactions or long-distance trade. Imagine transporting vast quantities of heavy copper coins. The solution came from an unexpected place: paper money. In 7th century China, during the Tang Dynasty, merchants began using flying money, or fei qian, promissory notes that could be exchanged for coins at a different location. By the 11th century, during the Song Dynasty, the world saw the first widespread use of true government-issued paper currency, known as jiaozi. In Europe, a similar concept emerged centuries later. Goldsmiths, who had secure vaults to store gold, began issuing receipts for gold deposits. These receipts, essentially early banknotes, circulated as a form of currency. They were more convenient and safer than carrying large amounts of gold. Initially, this was representative money, where each note represented a specific amount of precious metal held in reserve. Over time, this system evolved into fiat money. Unlike representative money, fiat currency is not backed by a physical commodity like gold or silver. Its value comes from government decree and the public's trust in that government and its economy. This was a significant leap of faith, but it offered governments unprecedented flexibility in managing their economies. The 20th century saw the widespread adoption of fiat currencies and the rise of powerful central banks. Institutions like the Bank of England and the U.S. Federal Reserve became crucial in managing a nation's money supply, controlling inflation, and acting as a lender of last resort to stabilize the financial system during crises. The abandonment of the gold standard by most countries freed monetary policy, allowing governments to respond more effectively to economic downturns like the Great Depression. The latter half of the 20th century introduced the digital revolution to money. Credit and debit cards were the first major step away from physical cash. Transactions became electronic, with money moving as data rather than physical notes or coins. This brought unprecedented convenience and speed to everyday transactions. The internet further accelerated this transformation. Online banking, e-commerce, and mobile payments made money even more abstract, existing primarily as entries in digital ledgers. Today, you can transfer vast sums across continents in seconds, all from your phone. This digital shift has made global trade seamless and significantly reduced the cost and risk associated with handling physical cash. The 21st century brought yet another disruption: cryptocurrencies. Bitcoin, launched in 2009, introduced a decentralized digital currency built on blockchain technology. Unlike traditional fiat currency, cryptocurrencies are not controlled by central banks or governments. They offer a new paradigm of peer-to-peer transactions, enhanced security, and often greater transparency. While cryptocurrencies face challenges like price volatility and regulatory uncertainty, their underlying technology has sparked immense interest. Many central banks are now exploring their own central bank digital currencies, CBDCs, aiming to combine the efficiency of digital money with the stability and oversight of a traditional financial system. The journey of money is a testament to human ingenuity. From simple seashells to complex algorithms, each evolution has reflected society's changing needs for trust, efficiency, and convenience in trade. What the future holds for money is uncertain, but one thing is clear: it will continue to evolve. Whether we move towards fully digital economies, embrace a hybrid system, or discover entirely new forms of exchange, money will remain a fundamental pillar of human interaction, always adapting to our ever-changing world.